So investing and money. And this is a topic that really interests me, and I've already been investing for a couple of years now. And I will talk about what my plan is and why you should also start investing. Also notice this is no financial advice, this is just my own opinions. Opinions. Anyways, this will just be a close-up whispering. If you do enjoy the video, please leave a like. Smash the like button. That would help me a lot. So thank you so much, and let's get started. So, first off, I will tell you my plans and what I want to do. So, a little bit of background information first. So basically, since I was 15 or 16, I was really interested in investing, but I always thought that it was really hard, and only for people with a lot of money. But oh boy, was I wrong. I was wrong. Investing isn't that hard. Yes, you have to learn a lot if you want to invest by yourself. But it's definitely worth it, and in my opinion, at least in where I live in the Netherlands, you don't learn anything about money or investing in schools. You learn a bit about the economics of the country and worldwide, but not so much about your own financials, like saving money, how to do your taxes and stuff like that. You don't get taught that at school, and I'm pretty sure this is something also in the States, because that's what I read online, and I think this is something worldwide. And I think that's something fundamentally wrong with schools, because they should teach more about personal growth, personal things as well. So, with that being said, when I was 15 or 16, I watched some documentaries about investing, and I don't know which, but it just came across, and it struck to me as really interesting, but something impossible for the normal human being like me. Fast forward till I was like 21, 22, and I came across a YouTuber who had like 5,000 or 10,000 subscribers and was talking about investing. And I'm not entirely sure how I ended up there, but he was talking about investing and helping people, or like making videos about people to start investing and about what he does and etc. This was about 4 or 5 years ago now. And that guy, he wrote a book on how to start investing, and not just like how to start investing, like buy a stock and sell a stock, but also about how he does his his due diligence, how he does his analytics, or how he analyzes a stock. And that was really eye-opening for me. So I bought that book. It was really good, and basically that was the start of me investing. And it's been like 4 years now, and so far I can say it's been pretty good 4 years, although a bit rough with a lot of mistakes, of course, but it worked really good. And I'm by any means rich or whatsoever, but I am really good at saving money, not spending a lot of money, and reinvesting that in the stock market. At this moment, my net worth in stocks is, it just dropped, but it's slightly below 30,000 euros. And it was 31,000 or 32,000, but it dropped like 3,500 in the last 2 weeks. So that is also something that comes with stock market investing. You have to be able to keep your emotions under control when you're investing with a lot of money. But of course it didn't start with all that money. So I saved a lot of money, and basically our saving interest in the banks in the Netherlands is 0%. And you even have to pay at some banks for having money. So with a negative interest, I really wanted to do something else with my money. So back in 2017 I started polishing my skills in investing. And at first I started you invest with like test money or no real money, like play money, you don't have that thrill and that feeling you have with real money. Because if you lose like 10% of your portfolio of a 100,000 play money account, well, it's not doing anything with you. But investing with real money and losing that is a lot different. And the most important skill that you need to have with investing is patience. And the second one would be keeping your emotions under control. In my opinion, these are really important, and a lot of people have troubles with that. So, when I started with 1,000 euros. So I, like I said, I saved a lot of money, and I wanted to invest 10,000 euros. And by the way, for calculation, like 1,000 euros would be around $1,100 to $1,200. So 10,000 euros would be $11,000 to $12,000 at this moment, and 30,000 euros I've invested would be around $33,000 to $36,000. So you know. Also, I don't mind being open about this. I think money is a really big taboo on it, but I think it's really important to be openly able to talk about money. So that's why. Anyways, I started with 1,000 euros and I made a lot of mistakes, of course, and I lost like 10% of it in the first month. But that was okay because I knew investing was long term, and also that I knew which mistakes I made. What I did was wrong, and what I did wrong was with the 1,000 euros. I invested in like 8 different stocks. So like with like 100 euros in a stock or 150. And the problem with that is at the moment I was investing with my bank, and the service fees were really high. So I already instantly lost like 5% just because I bought all those low amount of stocks. So later on I switched to a broker, an online broker, which don't have that high transaction fees. But like all those mistakes you learn along the way, and I knew that, and that's why I started with only 1,000 euros. And during that first year I upped that 1,000 euros to 10,000 euros. So I think I started in February or March of that year, and during that 10-month time span I gradually invested that 10,000 euros in the market. And ever since then I did save 200 euros a month to my investment account, and all the other money I saved went to my savings account for once I wanted to buy a home. So I've done that for 3 years, I'd say almost 3 years. So the first 10,000 euros was invested, and after that I did $200 euros a month for 3 years. And basically since last October, September, October, I decided that I had so much money on my savings account that it would be a waste to not invest more. And ever since then, I make sure to always keep a certain amount on my savings account for once I'm going to buy a house, a home. And also what I do. Sorry, it's really late here, really late. It's of course ASMR, so I'm filming at night. And what I do is when I use something of my savings account for a big purchase of anything, which I rarely do, but it can happen, then I will get it off my savings account and make sure to get back to the level I want before I start investing more. So what I do now is all the money I have left over at the end of the month I will invest, and that is roughly 1,000 to 1,500 euros a month at this moment. So I'm trying to grow my investment account really quickly, and I'm still pretty young. I'm 26. Yeah, I did tell about that. But what my goal is with this investing is gradually gain more interest over time, and I wanna quit working when I'm 50, and I think that is possible. 50 is like a possibility with a normal job for a boss. However, However, I do not intend to keep working for a boss for the rest of my career. I'm 26 now, and I work in IT, and before I'm 30, or at the latest at 30 I think, I want to start working on my own. So, I'm not sure how you call it in English, but as a contractor or whatsoever, and then hire myself out to businesses that need an IT guy. And I'm focusing on certain things, so like a specialty, so it get more expensive, of course. And with my calculations, I could, from where I'm now, I could easily double my net salary a month when doing that. But I feel like I'm a bit too underexperienced for now, so I want to work a couple more years for a boss, get some more papers and grow a bit more, and then I think in my line of work it's not weird for a 40-hour work week to make over 10,000 euros a month for doing it on my own. And that's of course pre-tax, so if you do work on your own, you have to pay a lot of taxes, of course, and you have to pay your own insurances and stuff like that where I live. So, but financially that's really attractive, and if I will do that in my 30s, I've not done full calculations, but I should be able to be a millionaire at age 40 at least. And then besides that, I'm also wanting to try out a couple more businesses, like online businesses maybe, but also maybe like real physical businesses, because well, I read a lot of books about money and millionaires and stuff like that, and basically 90% of the American millionaires is either a investor or a business owner, and most of them are both. And my goal isn't to be a millionaire to buy expensive things, because I never wear jewelry, no jewelry, no watches. I never intend to buy like expensive cars or an expensive house, but what I want is financial freedom, and it doesn't have to be luxury, but I do want to be able to travel a lot whenever I want to and do the things I like most. And it doesn't mean I will stop working, because at this moment I really enjoy working, but I don't want to have to work, and that's why I want to be financially free. And well, like I said, if I will keep working for a boss, I would be able to do that before my 50th birthday. And if I will work on my own or for myself, like I'm not sure how to call it, but if I do that, I should be able to retire at 40 at the latest. Of course, most of the money will be made from the stock market, but that's not all. I also want to start to buy rental properties pretty soon. I hope within the next 3 or 4 years as well. So that will be another income. And what I try to do is I try to create like lots of different types of income for myself, to grow as quickly as possible. And like I said, that's not because of greed or because of like wanting a luxury life or anything. I just want to be not reliant on a boss or on work or whatsoever. I want to do whatever I want to do in my life, and I don't want it to be like I have to have responsibilities for a job or a boss or whatsoever. So that's the reason why I'm investing in the stock market, and it's not that hard. I think everyone can do it, albeit you need to invest some time initially, and then you also need to start investing money, but first of all time, and you need to be able to, or want to be able to learn new things. And I know for myself, I've made a lot of mistakes, of course, when investing, and I'm investing at a bit of a higher risk, I would say, because I would invest in stocks myself, and I think for most people, investing in individual stocks would be too risky, because they want to play it safe, which I understand. But in that case, I would recommend investing in ETFs. That would be like exchange traded funds, be like a fund with hundreds or thousands of stocks in them. So you have like a really nice spread of different types of stocks. And I think everyone should do that. So that's a bit of backstory about me. I'm probably rambling on way too long. Let me see. Yeah, already 16 minutes. Whoops. Okay. So that would be about my goals on investing. I also told you a bit about why it would be interesting to invest, because well, I didn't really. So basically, the average return in the stock market is about 8%. That means if you invest $1,000 in the stock market on average, that's really important, on average, you would have $1,080 the next year. However, that doesn't sound like much, but if the most important thing with investing is compound interest, and what that means is interest over your interest over your interest over your interest, etc. So the first year you have $1,000. The second year you also gain interest on that. The third year you gain interest over your initial $1,000 and the interest over the last year. The fourth year you gain interest over your initial $1,000 over the interest you already had, and over the interest over the interest. Well, you can see where I'm going, and that's why it's important to invest for a long time. So start early will be really important. And my biggest regret or mistake in investing is not starting when I was 18. If I did, it would probably made me at least 20 or 30,000 euros more, I reckon, because the stock market was really good in those years. Although, like I said, the average is 8%. It also happens, obviously, that you have negative years, and that's the hardest, because that is where most investors choke. Instead of selling, what I do when the market goes down is I'm buying. I always make sure to keep money on the sideline so I can buy more stocks when they fall down, because this 8% is not every year. This 8% is the average over hundreds of years, or like long time. I think it's like from measurements from like in the 1900s. From the 1900s. So that's like for the last 100 years or something. That's the average, meaning you have years of 20%, but you also have years of minus 20 or minus 10%. And some people can handle like seeing 10% of their investments like 10, gone. So that's why your emotions, being able to control your emotions, is really important. But yeah, investing. So basically, I made some calculations. If you invest $200, so no initial investment, just $200 a month in the stock market, and you would do that in an average ETF, which would track, for example, the S&P 500, which are the American, or the 500 biggest American stocks. You would, on average, make 8%, so $200 a month would net you in, I think it was $700,000 in 40 years. Maybe it was even 30 years, I'm not sure. But a broad, like a long horizon, is really key when investing. So it's really important to start early and take it seriously, and I think that is something that should be taught in each school. Not just investing, but like all skills about money, like saving money, about debts, etc. Because I feel like so many people I know, and not just I know, but also on the internet and on TV, like everything promotes a, how do you say that in English? A lifestyle where they promote like buying things. I'm not sure how you call that in English. Like anyway, it's really to be promoted to buy new trousers, buy new shoes, and like really expensive things, like shoes from of $400 call it. A lot of people, what they do is when they make more money, they spend more money. So when they get a raise from their job, when they get a raise, instead of investing that extra money and keeping the same life, they spend $100 more, or whatever the amount is that they get raised, and they won't notice it. They won't be happier, and all they do is they spend more in like useless things. I think it's really important to keep living the lifestyle you have, which is comfortable to you, which is enjoyable to you, where you can do nice things. But